I literally sold door to door in the first 3 or 4 months, approached some of the larger banks there. We got shooed out of the building. We basically started off with 5,000 card portfolio, now grew it to where the relationship is about 28 million accounts.
Every country has their own payments play. That adds a huge level of complexity.
Our tipping point was reached in LATAM. Having Itaú in Brazil is like having, for example, Citi or JP Chase in the US.
75% of the banks that you're talking to are still in the world of mainframes or quasi-mainframes. Do we now have a migration playbook?
Our actual operating agents' data is now on the public cloud. That is a show of confidence like nothing.
Like every time we think we've had enough of payments, 10 other things happen.
The geopolitical landscape is changing immeasurably in front of us.
Good afternoon, ladies and gentlemen, and welcome to yet another episode of Couchonomics with Arjun. This time we're going online, and the person beaming in is actually from London, which is sort of my hometown, but he's a CEO of a very interesting business, which sort of found its life in Latin America, which itself is an interesting story because very recently for the 150th episode, we had someone from Latin America. But with further ado, let me welcome Vishal Dalal, who is the CEO of a company called Pismo. And for those who might not know what Pismo is, it is Pismo Beach from California. But Vishal, welcome to the show.
Very nice to be here. Thank you for having me.
Excellent. Vishal, I think there's a lot we want to cover, but I really want to first start with a little bit about what Pismo does and a little bit of the genesis of Pismo. As in, we were having a conversation about how you found, so how it was birthed in Brazil. So give us a little bit of a story about, Pismo from the time it got founded to 2025.
Yeah, I mean, and it is a pretty interesting story. So we founded in 2015 in Sao Paulo. The four founders, Ricardo, Julie, Danny, and Marcelo, used to work for another sort of payments firm called Conductor, which in itself was a technological leap from what existed in the mainframe times. But I think around 2015, they decided to take a fresh look at, at how to sort of, if they were to write this from scratch, how would they do it? And so they decided to Dani actually decided to, do a tour of Silicon Valley, right? And look at the current state of technology. She's a CTO. And, she was a bit stunned by what she found, right? And she said, look, if we're going to do this well, and if we're going to be future proof, we have to rewrite this from scratch. And she got this burst of inspiration while staring at the waves at Pismo Beach, which is why Pismo. All of us basically have a little bit on the Pismo Beach sand in a, small box on our sort of, somewhere in our house. So that's how Pismo was founded. We essentially rewrote all of the logic, into sort of cloud native microservices, to be scalable and things like that. So it was a complete rewrite. Founded in Brazil, we basically decided to, approach some of the larger banks there. Obviously, we got shooed out of the building. We went to Itaú, we got thrown out of the building, I think the first 9 rounds, saying, who are you guys? You're not serious players. We're Fortune 500 bank. Come back when you sort of proven yourselves, when you can handle 15,000 transactions per second. And so we went back, we basically worked on the technology, and we asked for another meeting, which was arranged by, I think, one of our investors. We proved it was 15,000 transactions per second. And then Itaú said, maybe there's something interesting here. We'll give you a small portfolio, and see how you do with it. So, there was a portfolio lying somewhere of about a few thousand credit cards, and they said, see what you can do with it. And so we gave it our best shot, and, it turned out to be a completely different product, and Itaú liked it a lot. So they started giving us more stuff, right? 5,000, 10,000, small portfolio lying here and there, basically said, see what you can do with it. And so we started doing a good job, and, Itaú's confidence grew. They basically said, okay, you look like you can sort of do a good job with cards. Can you sort of build a current account for us? That started as well, right? And, so we basically moved from the tens of thousands to the hundreds of thousands of accounts and started growing, right? All still new to bank customers. And I think in around 2017, 2018, we started getting other clients as well. Because again, having Itaú in Brazil is like sort of having, for example, Citi or JP Chase in the US, right, as a client. So the domino effect started playing out. And then I think by 2020, it was fair to say that we were not a dominant, but a prominent name in Brazil. And at that point in time, we were about to go in for the next stage of a funding. And, naturally the question arose, should we go international or not? And there were good reasons to stay in Brazil because, we were doing very well. The name was established, we were getting business. But then I think there were other things to think about, right? You don't want to concentrate your revenue on one market. The Brazil USD exchange rate sort of was a major issue. It fluctuated, every day depending on what day of the week it was. All of our expenses, because we are in AWS, were in US dollars. All of our revenue was in Brazilian real, right? So there were a few imbalances to be corrected. So it made sense to, go global. Uh, I was hired as the CEO of everything outside Brazil, right? And my mandate was very simple: take Pismo outside Brazil. Started off with a workforce of one. I think the first hire I made was my assistant. I literally sold door to door, right? I think in the first 3 or 4 months of my thing. And then, as I said, we won our first client outside India in around 4 months after I joined, in around August 2021. Then I think beginning of 2022, as I said, lives changed forever. Citi was sort of looking to, Citi was looking to sort of, select its new core ledger. And, we got in almost at the last minute. Uh, I don't think any one of us expected that we'd get anywhere. There were 12 or 13 other players in the selection process. But I think we essentially decided whatever happened, we would give it our best possible shot. And I think, most people were astonished by the ferocity of our response and the fact that they hadn't heard of us. And so I think after about a year of a very intense selection process, we got selected. We became Citi's core ledger for the transaction services business in 76 countries. Uh, and from there on, our life changed forever. I think a year after that, or 6 months after that, we came to Visa's attention. Right, Visa was looking for something which would sort of straddle the payments and the banking space. It got acquired, and here we are.
Excellent, brilliant story, and congratulations on the journey so far. So let me take a step back, right? I think core banking is, it's not a topic which a lot of people would talk about except if you were in it. But now I think increasingly with all the disruption going on, it's kind of front of mind, right? Like, whether you want to be as simple as mobile first to actually accommodating all this digital asset shenanigans which is going on, core banking has kind of become central to I guess any intelligent conversation. But let me start from a very simple statement. I'll come from a regulator's perspective, right? A regulator always says prove you're resilient, and I guess that is what Itaú also tried to mention it, right? They might have used the term 15,000 transactions, but it's all about resilience, right? As you sit today in 2026, right, what does good look like in terms of a core banking platform?
I think that's a great question. Let me try and dimensionalize it, right? From the point of view of scalability, look, I think, we basically made our play. We said we want to be where the large banks are. And, that means certain things, right? It means that, you have to be able to service between 100 to 200 million accounts at any given point in time, which is what a large bank is basically sized at, right? You have to, you can't sort of shy away, for example, when there's a Black Friday or a Cyber Monday, right? You have to be able to handle 3x the number of transactions that you would handle on a normal day. And you can't basically, say that, I'll be cruel or manual work to do it. Has to happen at the push of a button, right? So that's, I think, number two. Number three, in most places where we work for the large bank, we would rightfully be seen as critical infrastructure, right? We can't go down, right? So irrespective of, whether we're on the public cloud or anywhere it is, we can't go down. So there have to be multiple levels of resilience built in. So in our case, for example, if let's say, a cloud region goes down, we have to be able to seamlessly and instantaneously shift to another region, right? Without any loss of data. Uh,
Mhm.
and typically most regulators will say that, that distance between one region and another has to sort of at least span a seismic zone, right? So for example, if there's an earthquake, you have to be at least 600, 700 miles away, right? So, there are quite a lot of physical hurdles to accomplish. And then, of course, there are the basics. You have to be able to do the reporting, you have to be able to test with all your partners. So you can't just claim that you're sort of, disaster recovery ready. You have to be able to test it all the time, right? So those things are now almost table stakes, right?
Agreed.
And then there's the final part. If you're going to work with a large bank, you can't just say that you were set up for greenfield builds, right? You have to be able to actually migrate 200 million accounts from legacy platforms. along with all the transaction history built up over 30 years, seamlessly onto a new platform in the public cloud, right? Which is like the equivalent of essentially doing a heart transplant and a brain transplant with two knee transplants thrown in for free, essentially, right? So that's what it feels like.
No, so I get it. So let me put you on the spot here, right? If I was to, and I'm, over the 160 odd episodes I've been fortunate enough to record, I've had, other people in a similar sort of role as yours who sat here, who I would rather call your peer group rather than your competitor group. And if I kind of throw the same question, you get the same answers: scalability, ambidexterity, resilience, ability to back up, the basics of reporting, the importance to be able to migrate, right? To me, and please take this in the positive sort of sense, these are increasingly commoditized, right? In terms of, if I may say, features or in terms of principles, right? How do you then differentiate between one and the other? Yes, there's track record and there's credentials, and that'll obviously differentiate the ones which are slightly ahead of the curve and slightly behind. But if you go to a new market where there are no credentials like these, are you expecting most of your buyers to take a leap of faith?
So, great question. The short answer is actually yes, right? Most of our clients did take a leap of faith. Uh, our earliest clients, I mean, you cannot normally, right? For those of us who've grown up in the old world of banking, you cannot imagine a major bank, taking such a leap of faith and essentially saying, yes, we'll sort of throw the core jewels of our balance sheet, like our deposits and all, in the hands of a startup. It's very hard to imagine. And yet, if you think about it, that is what our pioneer clients did, right? They did take a leap of faith. I'd like to think that we were able to at least slightly de-risk it for them. So I told you the Itaú story, right? We basically started off with 5,000 card portfolio and, and essentially now grew it to where the relationship is about 28 million accounts. So you can see we've come a long way. But even now, for example, and this is a public story, we went live with ABN AMRO in the Netherlands, right? On Duke. We have no presence in the Netherlands, right?
Hmm.
You know, and of course, they were sort of rightly very circumspect, right? Saying, are you sure you're going to be able to do it? Uh, all we had at that point in time was our reputation, and the fact that we were now no longer a startup. But it was a leap of faith, to be fair. Thankfully, I think we repaid it. We went live in 10 weeks flat. But I like to think that hopefully this becomes easier, right? You reach a critical tipping point. So, for example, I think our tipping point was reached in LATAM when Itaú became a client, and internationally when sort of Citi became a client, right? It's almost like, when the cloud was not acceptable the first time, right? And I remember a major intelligence agency actually saying our actual operating agents' data is now on the public cloud. That is a show of confidence like nothing else, right? You're entrusting people's lives on public cloud. Same here. I think, once a major bank says, we are on the public cloud, it sort of changes, right? And it starts becoming slightly easier. I think it's still a day-to-day battle. If I, for example, go to a new country now, it will still be the same question. Oh, are you sort of ready for a region? Do you think our regulator will accept it? So, but I think it just becomes slightly easier every new time you do it. But yes, I think our first clients took a huge leap of faith, and I'd like to think we repaid it.
So, so I'm gonna ask you to go a little bit deeper because I think any founder or any innovator or builder listening here, would be interested. It doesn't matter if it's core banking or not core banking, but sort of collaborating with the incumbent. So talk us a little bit about Butte. How did you guys sort of get? Firstly, like how did you come on their radar? And maybe that came through either the relationship you have with Visa or because of the work we did with Citi. But that's of less interest to me. But in terms of what was the sort of the hard yards with them, which kind of got them over the line? And if I may just throw the second question again at the same time so that, you get a bit of a runway to give me an answer, is this localization context is important, right? And that localization context is not just from a regulatory perspective, although that could be quite important. Part of the world that I operate in, which is the GCC, some specific countries, cloud is still not off. Most people are still operating on-prem and so on and so forth. So talk to me a little bit about part two of the question was part of that. What is your strategy towards localization, and is that a very key criteria for you to sort of say we're not going into that market because it doesn't have some of the fundamental things that we need, so therefore why go into an extended sales cycle unnecessarily? Because I think a number of your peers, and I'll go on record to say that, and I think a number of them know me, I've actually said is that they were foolish to enter certain markets prematurely because I think they saw the size, they saw the carrot, they didn't understand, they didn't realize that to get the carrot, actually the journey was impossible. Sorry, very long question, two parts to it.
No, I think that makes a lot of sense. So let me start off with the second part of the question first. So yes, at this point in time, just because of who we are, right, there are certain markets that we will not have access to, and it won't make sense, right? So, for example, we only deploy on the public cloud. Right now, we only deploy on Amazon, AWS, right? So, so essentially, A, anyone who essentially does not permit banking on the public cloud is, at least for now, out of bounds. Now, we have a solution around that, which is the tokenization bit, but for now, at least, just simplifying it is out of bounds. Number two, I think it gets even stricter, right? Normally, as I said, in the disaster recovery example, you have to have a primary and a secondary of some sorts. Now, in regulations where the distance between the primary and secondary is required to be 500 miles or something like that, you necessarily have to have two regions, right? In the same country. Otherwise, it's sort of not viable. So if you think about it, that only sort of leaves the major country, right? It leaves the US. It leaves all of EU because EU is like sort of one zone. So you can't deploy Frankfurt or Dublin or things like that. You can do India because that's Mumbai and Hyderabad, right? There are two zones. You can do Australia because there's Sydney and Melbourne. But other than that, it's quite limited, right? So there are sort of certain zones which are out of bounds for us, at least now. We are sort of trying to think through what we need to do. And so we've now, for example, embarked, now we have the money, right? So we've embarked on a journey of cloud agnosticity, right? So we will sort of, hopefully be able to deploy on Azure and, Google Cloud as well, right? But I think that fundamental call of not going on-prem and staying on public cloud will necessarily sort of limit, what we can do. There is obviously a flip side to it, right? The more infrastructure you have to do, the more your margins get killed, right? If you have to learn 50 different infrastructure sort of profiles, it kills your margins. So I think we're comfortable and we've made a peace with that. But that essentially means that we have to be very good at what we do, right? In the AWS, we have to sort of set up an environment like this. We have to sort of move across environments like this, and we're sort of learning that. So I think that's number one. Second, if you look at localization, yes, right? The amount you have to localize plays a factor. And there are 2 or 3 different aspects to localization, right? So there's regulatory reporting, which is usually the simplest part, right? Because our platform, every time anything changes on the platform, an event is emitted. So you could always, sort of create any report, slice and dice it the way you want. But typically, most of the hard yards come in sort of Rails integration, right? Payments is now a national resource and a strategic national resource for most countries. So most countries will sort of retain control of it. So you will typically have to integrate with a local card scheme. So for example, if you pay in India, a local payment scheme like UPI in India, a local ATM network, right? And if there is a global network, fine, a local check clearing network or something like that. So that is where the work is, right? And, typically there's certification each time you sign on a new client and all. And so ideally you want to do it as few times as possible, which is why logically, the bigger the country, the more it makes sense. And so therefore you see why, for example, US, Brazil, India, right? And maybe the large countries in Europe instinctively make sense. You do it once and it keeps paying off many times. And why some of the smaller countries may not always make sense. So we've made a peace with that. But I think as we get more and more money and as we sort of perfect localization playbook, we start getting more adventurous, essentially, right? So that's number 2. Number 3, I think, is the first, irrespective of how ready you are, you could sort of be completely integrated with a payments network. You could be completely ready, integrated with a scheme and all of that. The first one is always hard, right? The first one in any market is always hard, right? And that hardness manifests itself in 2 or 3 different ways, right? In some countries, for example, like Europe, the way they do it is they essentially, if it's a large bank, they'll essentially say, okay, start off with this like small piece of the business, right? So for example, if it's a German bank, a large German bank, they won't give you Germany. They say, okay, start off with, for example, Channel Islands and show me how you do over there, right? Because the risk is different. So some will do it that way. Some will build a sidecar, right? They'll essentially say, here's the way Itaú did it. Here's like 5,000 accounts. Show me what you can do. Some will basically, do the pricing bit, saying, you're not proven. So, give it to us for a throwaway amount. And then if you prove yourself, you do something about it. Right? And some will essentially say, I don't trust you. I don't have a better alternative. I'll go with you. But I reserve the right to the moment I see any signs of this not going well, I reserve the right to cancel. So you have these safeguards that you have to deal with. And as I said, hopefully each time it gets easier. But those are the hard yards, and they are really hard yards.
Okay, you've opened up number of avenues for me to go in, and I like the way you structure your responses. Makes my life a lot easier because I can then counter the questions in a structured manner. Let's talk about payments, right? I think payments are a fascinating topic. Like every time we think we've had enough of payments, 10 other things happen at payments, right? So and payments, because of its, I guess, close intrinsicness with topics like financial inclusion, data sovereignty, et cetera, et cetera, et cetera, is actually becoming in a way incredibly localized, right? In the sense every country has their own sort of, if I may say, payments play. That adds a huge level of complexity, as you mentioned, because, yes, fine. In the big countries like India, US, it makes sense. You do one integration to UPI, you've got, I don't know, thousands of banks in India to go after, similarly in the US, and so on and so forth. But sooner or later, you will start going to countries which are maybe not that big, right? The number of banks might be 10, 20, 30, right? My question is not more around the technological complexity in terms of being able to bend, if I may say, in my terms, your tech, but does all of this expose you to a certain systemic risk if I may say, at a 10,000 feet view? Because I'm assuming you're still operating out of a common platform of some sorts, right? Or am I just barking down the wrong tree? And if I am, just correct me.
No, you're not. You're absolutely right. We're a SaaS platform. We have one code base, right? So the platform always has to keep running. And I think we're in a better position. And I have to say this, I think, because the founders were pretty visionary about how they did this. So uh, even when I joined, I wasn't aware of what this beast was, right? I was basically just learning. And, I essentially thought that the tech would be a big challenge, as you said. But I think what I found out was we managed a way to sort of architect it slightly differently. So the platform inside essentially just recognizes three types of payments: an incoming payment, an outgoing payment, and a book transfer. There is nothing else. It doesn't recognize anything. What I think we're doing pretty okay is, if you think about it, all card payments are on one protocol, ISO 8583. All other payments are on ISO 20022. So all we've done is we've sort of built adapters, right? So there's like a Brazil adapter, right, of ISO 8583. There's like a sort of, a Brazil adapter of ISO 20022 and things like that. So what's happened is the integration, the technical part, as you say, is commoditized. It's not as much of a challenge because of the way that we've architected it. Where I think it becomes harder is the operational part of it, right? Because
Okay.
Once you're sort of once you integrated, once you sort of said, I want to do this, the ease of integration now depends upon the operations part of it, right? How easy is the sort of payment rails to deal with on a day-to-day basis, right? Will they have a test kit? Do they have test cases? Do they have a ready-made simulator, or, are they sort of still finding their way around it, right? And the global players obviously do that much better. But you have this huge spectrum of operational complexity that you have to deal with. And I think the second thing is, you also have to deal with very different regulatory things, right? So, for example, some payment players will say, okay, once you're certified on us, you don't have to certify every time you get a new client. Someone else will say, no, you have to sort of do it every time you get a new client. Someone else will say, irrespective of how many clients you get, you have to recertify every 3 months. As a startup, we won't have had the money or the operational sort of footprint to deal with it, right? Obviously, now I think as we become a bit more financially secure, that's the reason we've had to wait until now, till we sort of start expanding. We had to earlier do it in very few places so that we could sort of manage it and get the biggest bang for our buck. So yes, it is a challenge, right? And we're just sort of learning to navigate it.
All right, and that's a fair enough answer. You can't predict all the challenges and therefore not have the answer. But here's one which I'm going to put to the table, which is one which I it's top of my table, and it's a conversation I like to have it. Right. So we'll take this word called digital assets, right, which is, I guess, the legitimized name for crypto these days, right? And we have everything from regulated stable coin where people are just losing their minds on. You cannot, you can't wake up in the morning if not to read 10 articles on stable coins. You have tokenized deposits, which arguably, in my view, will carry more money, and I think some of the reports sort of confirm that view. And some banks like JP Morgan and others have already started to sort of make some massive progress on it. We've got wholesale CBDCs, which is on testings around the world, right, including number of banks getting involved. And then there is an increased amount of, I may say, convergence between DeFi and TradFi, where a number of the DeFi principles, if I may say, or product structures are finding themselves in the DeFi world, right? This whole world of DeFi versus TradFi is turning into DeFi with TradFi. Okay. Is this forcing you guys all back to the drawing board? Because a lot of this is infrastructural, from what I understand.
Yeah, no, and it is at the lowest level of infrastructure, which is where the change is most
Yeah.
difficult. So
Yeah, settlement, programmable controls, compliance, and
exactly. And if you'd asked me this 18 months ago, I would have said, what, no, we just concentrate on what we do well. And we'll sort of make money when we can. But it, the problem is the change of pace has been so rapid that we're now sort of having to you know we're having to sort of take a look at everything, right? How our backend is designed. Obviously, right now it's very traditional. It's like any other distributed computing app with a backend database, which has persistence and things like that. Should we be adding a decentralized backend layer, right? Who should we sort of partner with over there? If it's CBDCs, how do we sort of begin to dip a toe into it? Is it something as simple as creating 3-letter CBDC codes that are backend and sort of things like that to be able to settle or not? Um, and it just goes on and on. So I think that basically approaching it in two ways, right? One is from the commercial point of view, right? If we get a client who's in that space, right, and who wants to start off with a traditional offering, but backed by some of those things. For example, we just run our first stablecoin back debit card sort of client issuance, right? It gives us a view into how this operates. We do what we do well, which is issue the debit cards against stable coins, but we get a view into how this works and we learn, right? And thankfully, we learn with someone much better than us guiding us. And then at a slightly sort of lower level, we now have a task force, right? Basically saying, how do we handle this? Right? What is the speed of adoption? So, for example, if we look at CBDCs, the Bahamas is probably ranked number one in the world because it's sort of become part of their daily life, right? So, just looking at how they're doing it, how does the settlement mechanism centrally work, right? How APIs have they sort of made it? What changes will we need to make, right? Can we, for example, just start with something very basic like adding a 3-letter, CBDC code and just seeing what we can do with it. All of those, I think, are starting to take up what I would say, and my main role, apart from being the public face of a company, is I also sort of run a products function, right? So it's starting to take up an outsized portion, right? Are we going to be here to have a seat at the table if this becomes the norm? Starting to form task forces, starting to run small POCs, it is sort of forcing us to take a look at it and a hard look, right?
good. So here's an interesting one again for you. So I've been talking to a number of these new age, what I call Generation 3 digital banks, which claim to be sort of AI led digital banks, i.e., they're orchestrating or they're building their platforms based on asking the question first, asking the question that can AI do this, rather than can we force AI into a existing process, right? Now, one of the things I've heard from a couple of them, and please correct me, they're saying that, most core banking providers in the market are layering in the AI. They're not AI led. And so, therefore, we're building our core banking ourselves because we want to be AI led or AI first, whatever the right word here is. How much of an existential threat is this for your sector going forward?
I think, and again, I say this with a lot of caution because, I've learned it's best to not to try to predict the future.
I agree with you. Hey, hence, I'm on this side of the
Right.
conversation, my friend.
I think if you can do this the right way, it will be disruptive in a positive way. So let me give you a few examples where we're sort of seeing this play out. If you look at the old world, the most massive problem that we had was migrations, right? Imagine like you had a mainframe based system, 200 million accounts sitting on it, hundreds of, well, tens of years of transaction data. How do you move something like that to a new platform, right? And typically, and I'm sorry if it gets technical, so just stop me, but typically the first thing that happens is, let's say you have like 50 million deposits, right? Sitting on an old system. You need to move those 50 million deposits on new system. What you would do in an old world is map each and every field of that old deposit onto a new platform. Interest rate, principal, penalty, things like that. Very painstaking process, right? The old vendor had no incentive to help you out because, he was like going to get thrown out anyway, right? Very painstaking process, used to take months. Uh, we recently sort of ran a prototype using an LLM. We let an LLM let loose on the old data model and new data model. And we timed what used to be a 3-month process to 18 minutes, right? And that sort of, if you think about it, is a game changer, right? That's just my example. Uh, there are a few other examples, right? And so if you think about it for me, right, operationally, what matters is, we get held to very hard SLAs, right? So, if a severity one defect occurs, for example, and it's a SaaS platform, we're running it live. If we don't resolve it in an hour, there are sort of legal, penalties or SLAs that we have to sort of post. And what happens is, earlier we used to depend on a few star engineers who knew, where to hit the spanner so that, the exact fault was more. We couldn't afford that, right? We had to sort of essentially ensure that an engineer who sort of just joined is ready to solve these issues in a matter of weeks, not in a matter of months, very sort of gained enough experience. Letting LLMs loose on all of our sort of past data, right, is now sort of enabling us to say things like, when something happens, we just sort of feed it, and it says, there's a good chance that the issue is this, which we would not have foreseen, and that sort of shaves, minutes and tens of minutes of your time, which is crucial to us. So in some ways, and again, they're an API-led system. Another use case that we're seeing is, earlier, for example, if we wanted to launch a new card, you had to know from our, dev website exactly which APIs to stitch together and what sequence, right? And if you didn't have expertise, that wasn't easy. Now, we're sort of starting to see AI tell us, take this combination and this sequence, and, it'll start working. We're getting live feedback. It is proving to be quite interesting and quite disruptive. So that's the positive side of it, right? So everything that we're sort of doing new, we can sort of see a change. For example, we're like launching a new mortgage product. Earlier, we would have had to sort of think of the microservices, code it, and things like that. We're now doing the basic APIs and microservices in a matter of minutes. So that's game changing, easy. The problem is when you already have a substantial code base, it may or may not have been written, very optimally, because that's just humans writing it. It's much harder to achieve productivity gains over there, or any sort of gains over there, right? There you can only sort of nibble, right? You can sort of say, I'll write the test cases for this differently. I'll sort of, start with a few journeys here. So there, that's much more difficult. So like everything else, when you're doing something new, the gains are like, disruptive. But, with sort of old code bases and things like that, we're finding that it takes a bit more time, right? So that's basically where we are. So I haven't yet worried about the fact that it's existential because, again, remember, out of the every 100 clients we have, 75 of them still have mainframes. So there's a long way away. But yes, the potential, at least from very initial days, seems like insanely immense.
No, I agree with you, and I think it's a little premature to say. There is a lot of conversation to say that the new age platforms like yourselves, if you don't start becoming AI first, you run the risk of becoming legacy very soon. I think yes, as a overarching narrative to the direction of travel, yes, that is, everything becomes legacy after a while, right? Legacy is a function of time rather than anything else. But I do think that this whole injection of AI is quite interesting. And I'll be honest with you. I'm an old dog learning new tricks, or actually, let's put it this way, failing to learn new tricks. But what I've actually seen is some stupendous numbers. Right, I came across a bank very recently in Southeast Asia, which broke even in under 2 years. They have 300 employees. They service 8 million customers. It's a full-fledged bank, right? And they've been able to do it because they built themselves with the same principles as you're talking, which was AI first, and they were able to sort of scale, build the resilience, the intelligence, and so on and so forth. And I do think that will. I think incumbents will take a little bit more time. I think they'll take their products and sort of shape up, which is where it brings me. I'm cognizant of time. So I've got two questions for you. The first one here is, uh, it's an age-old conversation, but it still remains quite valid. And I think it's even valid because of what you just mentioned, that 75% of the banks that you're talking to are still in the world of mainframes or quasi-mainframes. Do we now have a migration playbook which you believe works 100% of the time is an exaggeration, but most times? First question. Secondly, despite that, are there certain types of mistakes that banks and providers continue to make day in and day out, and they don't seem to learn from it?
So in terms of playbook, I think the way I would put it is I see light at the end of the tunnel, right? And again, as I said, I come from an old world where, migrations basically meant sleeping on the data center floor for, 3 nights and, getting it done. And something would always go wrong. When I say I see light at the end of the tunnel, I've seen our last 3 migrations, all of them have been on time, right? And sort of have, auto reconciled and things like that, right? You don't have to run manual scripts that account A on the new platform has the same balance as account A on the old platform, right? So we're starting to sort of see migrations starting to happen on time. I think the easiest analogy is they don't feel like brain transplants anymore. They feel like knee transplants, slightly lower risk. My hope is that in the next 3 years, we'll get to the stage of a tonsillectomy, right? Just taking out a tonsil. And I think that is sort of happening even as we speak. So I can see that, right? Having said that, I think the problem, some of the basic problems, which I would almost call the operational and contractual problems, are still there, right? So, and they're there because, again, just of a time gap, right? So most people who sort of, bought their systems in like the 80s and 90s are still not very well protected, right? And here it's sort of more a question of human nature, right? No one really foresaw what this would mean. No one really foresaw that data formats would change, right? Earlier it was like a backend database. Now everything is like JSON format. No one foresaw all of this. And so adequate protections were not there contractually. So today, if you're sort of, trying to move from an old platform to a new one, the old platform vendor has no incentive to help you out and they're not protected, right? So, that's number one. Number two, if you combine this with the fact that, banks are still just deploying around the edge in AI, they're still not very comfortable with what it can and cannot do. So it's still very restricted in terms of AI. So a few progressive banks will say, yeah, let an LLM loose on my data, see what you come up with. But 96, 97% of the banks are saying, I don't want an LLM anywhere near my data. I don't know where that data would go, what could happen with it, what the LLM could learn. So that governance is still a little bit of a problem. So if you combine these two, right, I think a large part of the problem is still there. And I think they're like about, I would say, 2 or 3 years away before this sort of becomes, a slightly more tractable problem.
Yeah, I get it sensibly. Vishal, we're nearly out of time. I've got one last question. It's more of a personal question, right? You took over in 2021, you said, correct?
Yeah. Yeah.
So you've been at the helm of affairs for about 4.5 years, 5 years to come. In that 5 years, you guys have grown, multi-country, multi-jurisdiction, multi-customer. So let's kind of sum that up as what I call velocity, right? There is obviously the safety view. And what I mean by the safety view is making sure that you continue to do the utterly boring, utterly well, you keep delivering, because at the end of the day, great can turn into bad pretty quickly,
Right.
right? In our world, financial services, highly regulated, massively reputational, so on and so forth. And I've seen a number of startups kind of, go into hyper growth mode, under deliver, and then realize that, God, there's no light at the end of the tunnel using a set. How are you managing this both at a personal level in terms of as being a CEO and actually making sure that the company remains in, with the right sort of governance and checks and balances?
Yeah, I think given how fast the company is growing, the only way really to do it is to essentially establish a set of principles, right? And I think, the the principle that I'm trying to put in place at this point is stability and safety above anything else, right? I think we've been lucky that, very lucky, that, most of our clients sort of seem to have good things to say about us. But I'm also painfully aware and scared that the geopolitical landscape is changing immeasurably in front of us, right? And I think the only haven that I have is safety. So I'll give you an example, right? I mean, in the olden days, if you were a bank, it was okay from a disaster recovery point of view to sort of have one data center, let's say, right next to you, one data center 100 kilometers away, and, you could sort of shift in a reasonable amount of time. In today's world, where, for example, you sort of see increasingly number of wars, right? You sort of see the possibility of geopolitical conflict, sometimes between nuclear nations. Those 100 kilometers are no guarantee of anything, right? A large device will sort of cause untold damage, for example, right? How do you still keep running, right? How do you still keep running in a scenario like that? The only way you keep running is if you can instantaneously sort of, go to another region which is 3,000 miles away and still set up, right? At the click of a finger. All right. Now, if I sort of go to a board and say this, then I want to sort of build for this, they'll essentially say, yeah, how likely is this to happen? 4 years ago, they would have said, this is not, don't waste your time. Now, I think, people are more cognizant of the risk, right? People understand what can happen. And, some of that is sort of being borne out by events in real time, right? Earlier, for example, the cloud used to be thought of as infallible, right? Uh, we know now, from the past few days that it's not, right? Why failures are rare, when they happen, they basically sort of, turn the world upside down. And so I think, from a mindset earlier where I was just trying to gain footprint and market share, right now, sort of, I have a luxury, but also the necessity of sort of saying, okay, let's get safe now, right? We can never go down what happens. Otherwise, as you said, all this that we built just goes away in an instant, right? So I would say about 60% of my time is spent on this, right? Are we safe? Yeah. It is sort of major consideration.
Excellent. Vishal, I want to thank you. I appreciate you making the time in London. Hopefully, as I said to you before we started, well, London is home for me, so I should be back there in December. If you're around, would love to grab a cup of coffee and, as they say, chew the fat a bit more.
Yeah. Yeah.
So thanks a lot for taking our time.
No, a pleasure. Thank you for having me. It was great fun.
Thank you. So, ladies and gentlemen, that was Vishal Dalal, who is the CEO of Pismo. I think what I liked about this conversation is he's got a highly pragmatic perspective to think. There is a sense of realism. Uh, you know, Builders should be dreamers, but should not be hallucinating. And this is one chap who doesn't come across as hallucinating. And the fact that he's actually spending a certain percentage of time, she quantified quite well on thinking about safety, security, and making sure that what he builds is sustainable is excellent. So with that, I'll say goodbye and I'll see you guys next week. Bye bye.